Good afternoon, good evening, everybody. Welcome. Let's go for it. This is the 2024 US election rundown. We're going to start off with a very fitting quote. Markets don't care who gets into the White House. This was said a number of times by Warren Buffett. And what he's ultimately leaning on is that, yes, elections create short-term volatility. But in the long run, at the end of the day, markets are driven by economic fundamentals, not the person that sits in the White House. Now, sure, if that person in the White House puts some very, very strong policy in place, that has got implications for markets. But until that policy is in place, until we know what that policy is, ultimately, no one really cares who gets into the White House. Okay. Now, the example to look at is go back to 2016 election. Very few of you perhaps traded this, but the narrative was clear. If Trump wins, markets are in serious trouble, right? Uncertainty was at an all-time high should he get into the White House because no one knew the character of the person. Now, on the night of the 2016 election, the S&P reacted with very, very significant volatility. We went volatility stop out. In other words, we were down more than 5% in the overnight markets. Cash markets were shut. Everyone was panicking. Why? Because no one was hedged. The blue team was supposed to win the election. What happened 12 hours later? The market reversed the entire move and we finished the day up 1.1%. Why? Because everyone looked at it as, sure, we might not know who he is, but we do know that he is very pro-business, he's pro-deregulation, he's pro-infrastructure spending, pro-tax cuts, and all of that is fantastic for the stock markets. The reality, markets rallied 40% over the following year. That low tick, that limit down was the low. Okay. And the point is that you've got to be so careful going into these elections with some preconceived notion that something is because of. Sure, we have an idea what each candidate's policies are, but at the end of the day, the market and price will determine what happens post the election. Now, in terms of today's session, we're going to talk about the 2024 overview. I'm going to go through a couple of ideas, but the crux of it where I want to get to is I want to look at 2016. I want to look at 2020 as elections, and then I want to show you the key lessons to take away from them, as well as what is the 2024 setup? What's the context into which we're going into this election? And what are the trade scenarios from that point? In other words, if the blue team wins, what can you expect? If the red team wins, what can you expect? Where are the markets you want to trade? And how do you want to ultimately trade them? At the end, I will open up, of course, for some Q&A. If there are questions, by the way, as I'm speaking, I'm not going to stop and answer them, but do put them in the chat. Okay, I will get to it right at the end and I'll answer them. Now, election is Tuesday, tomorrow. The main candidates, you know who they are. The key issues on which they're fighting, in other words, the key market issues, it's very much the economy and inflation. Both candidates want to address the economy. Both are very much pro-fiscal spending. Trump is emphasizing more the tax side of things and deregulation, whereas Harris is focusing more on economic equality and investment into green energy. At the end of the day, both want to spend more money. Trump favored to spend slightly more money. But again, it all depends. The devil's in the detail, and this is the key. Economists are forecasting Trump will be more inflationary. But until he actually enacts any policy, we do not know this to be true. Okay, and that's important to stress. There is something we know to be true, which is that perhaps Trump may be more inflationary. We can see it already reflected in the price. Now we actually need to see the policy measures coming through before the markets will react. And I'll show you this sort of narrative over the course of today's session when we get onto the charts. Now, in terms of immigration, Trump wants strict immigration, whereas Kamala is more about enabling people in via the legal route. In terms of foreign policy, Trump is emphasizing ending foreign conflicts, whereas Harris is more along the lines of funding continuing wars. We then, of course, have crypto as well, which is on the docket. Trump favors deregulation, whereas Kamala faces, she likes crypto, but faces, or at least wants to continue the current stance, which is consumers need to be protected. Okay, and then finally, on, of course, the environment, we know Trump absolutely loves the idea of drilling and pumping as much oil as possible so that there's less dependency on OPEC in the Middle East, whereas Kamala is very much about pro-environment, pro-green, anti-pump and fracking. Okay, now, in terms of the key polls, there's three things to pay attention to. I will in a moment show you a little bit of let's call it a polling model, a very baseline model, and how it works. But there's three sort of key sort of classes of swing states you need to be aware of. Okay, the first is obviously, of course, Arizona. That is known as the Hispanic vote. We then have Georgia, which is known as the black vote, and we have Pennsylvania, which is known as the white working class vote. Now, these three are three very key polling swing states, and we'll talk about why in a moment. Okay. What you have on the left side, this is a basic sort of a model that will be updating in real time on the night of the election. It's something I use to determine momentum. Now, I'm not going to go through this in great detail. That's not the purpose of the stream, but I'm just going to showcase to you that there are two types of trades you're going to do over this election. There is the night of the election, where you're going to have volatility and you're going to have opportunity that's driven by momentum in what's happening in the polls. We then have what comes next. In other words, the election result is announced, and then we have the trade into year end and beyond. So it's two different trades. You've got to look at them as two separate things. Now, on the night of, it's very much about what is the market's current hedging and what is the outcome, okay? And what comes after that is who's in the house, what sort of a majority do they have? Do they have a clean sweep or not? And what policies are they likely to get over the line? And what are the implications for markets of that? Two different types of trades and two different opportunity scope. And it's important you know the difference, because coming into this election, should Trump win the White House? Yes, there's this idea is going to be more inflationary. Is he going to be more inflationary in the next week or month? Absolutely not. Okay. Is he going to be more inflationary perhaps over the next 4 years? Absolutely yes. Right. And that's two different trades. And you need to understand that. Otherwise, you're going to get sucked into this bias and you're going to be fading a market that in actual fact is just unwinding some of the hedging that may be in it already. Okay. Now, how this works, you've got all the states on the left. And in a very simple way to think about this is these are your states. This is your previous election. This is what happened. We then have ultimately the electoral vote. In other words, the number count they get if they win that state. And then we have the margin of victory. Now, this is how the general model works. It looks at what are very solid red states, what are very solid blue states, and it kind of allocates them. Okay, if Vermont is very much 35% margin victory in the 2020 election in terms of Democrats, we assume it's going to happen that way again. Okay, and that's what this margin is used for. Anything that's above around 10%, we automatically allocate it. Anything less, we want to obviously flag it because it is something that could perhaps flip. Okay, we then have the House seats. This is another part of the night we need to focus on. I'll talk about this in a minute. We have some poll closing times. Okay, very, very important. We watch the poll closing times because we get early poll counts. In other words, you'll see the television will tell you we're 2 minutes away from the poll closing time, at which point we're going to release a count. Okay, and what that is they take a sample of the voters, they count it up, and then they say, based on this, we roughly estimate that the Democrats are likely to win this. Okay. Now, the markets move on that because, like I said, it's all about pricing and momentum, all right? And what you want to look for there very, very closely is the shocks, okay? So, for example, there's a little bit of talk that Ohio, sorry, not Ohio. Where is it on my page? There's a talk of one of the states down the page. One sec. I think I've lost my train of thought there. There's one of the states that there's talks now that ultimately the Republicans could lose it. The Democrats are doing slightly better. So if that early poll was to point towards Democrats doing very, very well, that will suddenly create a shift in the momentum. Okay, so that's what we're looking for. We're looking for these kinds of dramatic flips that ultimately are opposite to what the market thought was quite conclusive. Okay, and that's the key sort of with regards to the early polls. And then just as a matter of reference, the results time, I've got those as well. Okay, to make sure that if there's going to be a late count of something, I want to be aware of that. And then finally, the comments. Okay, so this was flipped in the previous election. There's a small margin here. There's a Latino vote here. This is just commentary for myself as a trader, so I'm aware of where the opportunities may come from. Now, what I want to point your attention to, and this is the key with the swing groups, and this is kind of, the swing groups is always ultimately where the momentum is driven from on elections. We've got four major groupings. Okay. Now, if we look back to the previous election, Florida, Texas, and Ohio was the first major group. And ultimately, the Republicans swept all three of these. Okay. They did very, very well in these. And there's an expectation that the Republicans, if they're going to win this election, they pretty much have to win all three of these again. Okay. If that is the case, if they were to win all three of these, we can see that roughly speaking, there's a 73% chance they'll win the election. Now, it's not guaranteed, but you can see that if suddenly they lost one of these, that probability of victory drops off significantly. So we know that for the Republicans to do well, ultimately, they have to win Florida, Texas, and Ohio, all three, not any single one dropping out. Okay. Now the same goes for these 0.2, 3, and 4. These are seen as group swing states. Why? Because Pennsylvania, Michigan, and Wisconsin is seen as the white middle class vote. In other words, a white working class vote. In other words, they typically all vote for the same candidate election after election. Okay, it's the same as Arizona, Nevada is seen as the Latino vote. They typically vote together for the same candidate. Georgia and North Carolina is seen as the black vote, and that typically votes for the same candidate election after election. In other words, if Trump starts to do well in Pennsylvania, if the early polls point towards Pennsylvania going to Trump, the market's going to assume Michigan and Wisconsin goes that as well. Okay. If Kamala Harris does well in Arizona, the market's going to assume that Arizona, Nevada goes to the Democrats. Okay. And again, what this model is doing now is as you're updating who's winning one of these states, these odds start to jump up and down. They start to move in favor or against a certain candidate. Okay. That's the night of. Now, one thing I want to stress with this, okay, with this approach to trading, be very, very nimble when it comes to odds. Okay, the markets are going to ebb and flow. How it works is the markets are going to be open. We're going to see the states start to come out, and the markets are going to start to move a little bit. Right? And they're going to price in a 5-6% chance, more likely the Democrats are going to win. And then all of a sudden, another poll comes, and they say, "Oh, hang on a sec, that 5% that went to the Democrats, now it's back to zero." And then they're going to go the other way. So it's going to ebb and flow and ebb and flow and ebb and flow until we get to these key swing states. Okay. And when we get to these key swing states, the market's going to use the early polls to start to try and figure out the probabilities. It's going to move up and down on probabilities. That's what's going to happen the entire night. Okay. Now, how you have to see this is that the market is hedged for a certain event, and we'll go through that hedging later on. But ultimately, in fact, let's talk about it now. The market is hedging against a bit of a Trump sweep. In other words, Trump wins the White House as well as the Senate. Now, if that is the case, the market's hedging against it, it'll move a certain way. But if at the start of the night, perhaps one of the early polls shows Ohio, the Democrats are doing very, very well there. What's going to happen is some of those hedges are going to come unstuck. Okay, you're going to see the bonds bid up. You're going to see the dollar offer. You're going to see Bitcoin sell off. All right. How much it sells off is obviously the degree or based on the degree of the news flow coming out. Okay. In other words, if it's confirmed he's going to lose Ohio, that's a much bigger probability change than if, the early polls suggest the Democrats are doing very, very well in Ohio. Okay. Moreover, keep in mind, if the market is hedged for Trump to win, there's an expectation he's going to win. So if the Democrats start to do very, very well, ultimately that's going to create a much bigger move than if Trump starts to do very well in Florida, Texas, Ohio. That's expected. So yes, the market's of course going to also move on that, but the degree of the move will be much less than if it's an unexpected outcome. Okay, that's the important thing to stress. Now, for you as a trader, obviously for many of you, this might be your first election. Don't get sucked into thinking you have to come draw up some fancy little Excel thing here. You don't. You don't need to be too smart for elections. What you can do is get up a 1-minute chart with volume. Okay, lean on the volume because the volume will ultimately tell you where the consensus is. Now, the only difference with that is keep in mind, by the time you see the volume rock up, it's pretty much they're already in the price. In other words, the probability is already adjusted. Okay, so you're going to be a lot later to moves than, for example, if you have a little bit of a model like this where, hey, I'm watching Florida. Oh, wow, Trump didn't do so well in Florida. Bang, I'm long the bonds. Okay, so it's a case of where you're ultimately going to get involved will depend on how early you are in terms of the news flow. Okay, so just understand you don't have to have a model like this. A 1-minute chart with volume will tell you when that momentum starts to get priced in. Okay, if this is your first election, have fun. Okay, don't overthink it. Don't be biased on any kind of candidate. Don't have too much of a long-term view other than 5 minutes. Just keep an open mind. Go with the flow. Watch it. It's hugely entertaining and it's a lot of fun to trade it, to scalp it out, to see how it all plays out. Okay. There are some key plays which we'll discuss when we get towards the end of this, and those are the ones you can be quite confident with should they happen. But for most part of it, most of the night, don't overcommit. Just play around, have a little bit of fun, experience your first election. Okay, that's the key takeaway from this. Now, in terms of where I want to go to next, there's a couple of things that I want to bring your attention to. And the one is this idea of a clean sweep. What's a clean sweep or a unified house? Okay. If you go back to 2020 election, the Democrats won the Senate, they won the House, they won the election. Okay, they controlled all parts of Congress as well as the White House. What that means is Joe Biden could pretty much do what he liked in terms of policy. Okay, he'd have very little friction in getting his policy, through. Okay, and so what it typically means when one house controls both Congress and the House is that their policies typically get through a lot quicker, a lot easier, and they can actually get to work quite a lot sooner. Okay. Now, it's not to say that everything goes through. It's not just to say if Trump says, I want 100% tariffs on China, that is the case. But that's the logic, which is if he sweeps, it's very, very good and his policies will have little objection. That's how you have to think about this. If he doesn't sweep, what does that mean? Well, it means if he puts his hand up and says, I think we need to start pumping oil and, fracking and, unlimited amounts of oil because X, Y, and Z. At the end of the day, the Democrats can put up their foot and say, look, we're not going to agree to that unless you give us X, Y, and Z. Okay, so all it means is that, sure, some of his policy will be put in play, but there's going to be more friction. Things take longer. Typically, they have to be a little bit more watered down. Okay, do you think the Democrats are going to allow another another corporate tax for corporations in the United States when they are effectively balloting on this idea of economic equality? Perhaps not. Okay, and that's the point, is that it will create friction for some of Trump's policies if he doesn't win or sweep. And likewise, the converse is true. Okay, if Kamala Harris does a sweep, which of course is possible, unlikely, not a high probability, there's roughly a much smaller chance of that happening. There's talk of around a 70% chance of a Trump sweep. If Kamala does a sweep, which of course is a possibility, okay, again, then it means that the Democrats control the House in the same way that they did when Biden came into power. Okay. Now, there's other things happening. Don't forget, of course, the control, the sweep, or the government controlling both Congress and the White House does change. Okay, we of course have Senate votes, in between elections as well as House votes. Okay, so it's not a case of they control it for the whole 4-year term. So things can, of course, change in 2 years' time. All right, now that's what I want you to take. The second thing I want you to take away was in 2020, one of the key things we learned was this idea of mail-in ballots. This formed a massive part of the 2020 election. It was very problematic in a sense that at the start of the night, the Republicans were doing extremely well. It was seen as the red sweep. Everyone was getting super positive. And it was all because a lot of the mail-in ballots had come from Democrats. Okay, it was COVID, so millions more were effectively voting from home, and those votes took a lot longer to count. Okay, now again, how did the markets move? Well, the markets moved very aggressively on the red sweep, and then they had to unwind the whole red sweep as, of course, those mail-in ballots started to be counted. Okay, one other thing we learned from 2020, which is a very important thing to stress. The election result was contested. Okay, in other words, Trump came out and noted or challenged a number of outcomes. They were put to the Supreme Court. The result, of course, was that the actual declaration of victory was only given to the Democrats 4 days later. Okay, now this potentially is something to keep a very close eye on. We will discuss this towards the end. There has been a time in history, if you go back to Bush and Al Gore back in 2020, 2000, I think it was. And effectively what happened was there was a dispute. It was a very, very close election. It came down to Florida. It was put to the Supreme Court. Neither team was willing to accept the result. It went to the Supreme Court, and eventually we obviously got the result. But we had a whole month. It was 32 days between when the election took place and when we actually got an outcome. Now, why does this matter? Well, because there's a little bit of hype. There's a little bit of a story that there could be quite a significant degree of civil unrest into this election. Now, again, things were a lot more civil back in 2020. I think in general, politics was a lot more civil back then. There was some degree of civil unrest, but not the same sort of thing that we saw in the last election where we had people storming ultimately Congress. Okay. So I think the key takeaway is, should we have a contested election? Should both the Democrats and the Republicans come out and say, we're contesting, we don't agree, we're challenging in the Supreme Court? What that's going to lead the market to do is price in a degree of uncertainty. In that event, do not think long bonds, long gold, short stock market. Don't think anything of it. Don't fade it. Don't do anything other than put on the uncertainty trades. Okay. Long yen. That's another one that's very oversold that will have a fantastic upside move should there be a contested election from both sides. Now, if we have a repeat of 2020 where Trump says no recount, okay, or the Democrats say no recount, that will also create a little bit of uncertainty, but it depends how close the election is. And this is the key. The closer it is, the more likelihood there is going to be an uncertain outcome. Okay, and the higher the probability is we get an uncertain outcome, the higher probability is that we as traders need to almost be putting on those hedges against some form of a challenge. Okay, and so that's how it's going to work over the night. If you feel like it's not really going anywhere, there's tit for tat, the commentary starts to turn a bit sour. Perhaps we see I'm going to challenge that, I'm going to challenge that. All of a sudden the market's going to start to price in a bit of a risk-off scenario. Okay, and that will filter over through into the next day and the next day and the next day. That's the important thing I want you to take away, what we learned about in the 2020 election. Okay, now let's go and look at history, because it's history that teaches us a lot about what to expect on the night. Okay, elections don't matter. This is the key. What I want you to think about is, I want you to think about blue team, red team. Think about, if the blue team wins, this is what I do. If the red team wins, this is what I do. It doesn't really matter who wins. Okay, what matters is your reaction function to who wins. Now, if you go back to 2016, like I said, the story was Hillary Clinton all the way. No one even hedged against Trump. We know that. Why? Because if you look at the purple line, which is the VIX, we can see that the VIX rallied initially and sold off to a lower amount before the election. And what did it do once Trump came into power? It stayed muted and offered after that. What do you think equities did? Well, let's see. Green line, S&P, there it is, rallied into year end. Okay? That's the key. There was no VIX pricing. There was no concern of a Trump win in 2016. The bonds, however, priced in a little bit of volatility. Post the victory, they continued higher. Why? Well, what did Trump mean? Trump meant more deregulation, more tariffs, more spending, therefore more inflation. The result was bonds needed to price in a little bit of a higher level of uncertainty. Okay. The result, bonds 2 years in purple, you can see they rallied a good 45 basis points over the course of November. 45 basis points over the course of November. Okay, that was because why? And this is key to stress. The market had not priced in a Trump victory. It was expecting Hillary to win. So when Trump did win, it had to price in what Trump's policies would mean for the market. And we know they were more inflationary. That's why 2-year yields ultimately rose. What did they do for the next 6-7 months? Went nowhere. Okay. Now, this is important to stress because there's talk that both candidates will be inflationary. As a result, markets have hedged against this inflationary environment. Now, if Trump sweeps and comes into power, at the end of the day, the inflation narrative is already priced. Okay, and I'll show you this when we get to the 2024 pricing, but ultimately the market's already priced this inflationary theme from both candidates. Now, sure, Trump might be a little bit more inflationary, but the reality is the market's priced it already. And this is key because there'll be a thinking going into this that should Trump win and sweep, therefore inflation expectations should go through the roof, bonds will keep collapsing. In reality, the bonds have already sold off into this event. They're already pricing the likelihood of an inflationary Trump sweep coming into the White House. Now, what I want to stress, and this is key, that's 2016 when Trump won. That was the low tick. That was the volatility stop down. We rallied 40% over the next year. Why? Because Trump was fantastic for markets, okay? He was cutting corporate taxes. He was deregulating. He was pumping money into the system. He was ultimately leading a more fiscally growth-driven economy, okay? The result was very, very positive for stocks. Now, If you go look at when stocks rallied, when did they actually rally? Well, November was more or less when Trump actually put out his tax cut policy. So sure, markets were grinding higher. This is not exactly a significant move higher. It's 150 points over 6 months. The real move came when Trump actually put his policies into play. That's the key. The devil's in the detail here. And it's the same for bonds. Okay, if Trump's going to be inflationary, we're going to actually have to wait for his policies to come into play before we can start to understand the degree of how inflationary. Okay, the same thing is if you look at what do bond yields do in purple. Bond yields rallied from 170 all the way up the page to 260 in a space of 6 months. Why? Because then the market started to fully understand that Trump was going to be quite inflationary. Now, what did gold do? Well, higher yields. What does gold do in a high yield environment, strong dollar environment? Of course it sells off. And again, gold is super topical at this point. Why? Because it's up 40% this year. Everyone's long gold on this idea that inflation is going to be, sort of higher in the future, that the Fed's losing track, they're cutting 50 basis points. Everyone is long gold already. So sure, I get this idea that Trump sweeps, gold goes up. I do get that idea. But everyone's got that idea. Everyone's long gold already. And so that's something you have to be very cautious of. We're a little bit overbought. And if he does sweep, yes, perhaps gold does pop up 28.50s, 29, make a new record high, suck in some more longs. But watch the price action very, very carefully. Okay. That's the key takeaway from 2016, which was Trump won. It was unexpected. It wasn't priced. What did the market do after it got the result? It priced in higher yields. It priced in a stronger dollar. The result was gold sold off and equities loved his policy. That was the easy play in 2016, not the play that the Financial Times and the Bloomberg was telling us, which is if Trump gets into power, he's going to be a problem for the markets. That's the storytelling. Okay. At the end of the day, the market doesn't care who gets into the White House. The market cares about the policies that come with whoever gets in the White House. That's the key. Now, let's go and have a look at 2020. All right, fast forward. COVID. That's the context. It's COVID. We're 6, 7, 8 months into COVID. And we can see that going into that election, what did bond volatility do? Oh, surprise, surprise. It bit up in the same way that same way it did in 2016. Okay, what did equity volatility do? It's initially sold off in the early parts and rallied back, but sold off prior to the election. Exactly the same as 2016. Okay, so what do we think happened if the VIX sold off prior and afterwards? What do we think happened? Well, there's the S&P result. Okay, we can see the election outcome and we can see, it just goes up and to the right. Okay, the point is that markets don't care about the candidate, they care about the policy. Biden was very much spend, 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 put more money in the economy, put more money in people's pockets, and the markets absolutely loved that. Okay, if I go back to this chart, we can see bond volatility sold off afterwards. Why? Well, because it hedged slightly on Biden. Once it understood what Biden was, perhaps it was hedging against a Trump event because it learned from 2016. So it hedged. Trump didn't win. And what happened to the bond volatility? It came back down. And what do we see bonds do? They sold off. Now, why does this matter? Well, because going into this election, we've got bonds that are bidding up on a Trump hedge, and we've got equities doing absolutely nothing. Now, should Trump not win, bond vol should come back down. Equity vol should also come down. Equity should rally. Bonds should rally. Okay, that's why I'm showing you these charts, because we're seeing identical setups to what we've seen in 16 and 20 going into the 2020 election. Now, very quickly, what did gold and the dollar do? Well, we can see as of the election in 2020, gold initially bid up and sold off 7% afterwards. And we can see that the dollar index sold off afterwards. Okay. Again, why did dollar sell off, 4 and a bit percent into year end? Why did gold sell off? Well, perhaps it was a combination of, Biden was going to come in. He was a bit more on the spending side of things. And ultimately, we were at a time in COVID. There was still more bigger fundamental policies at play that were taking center stage. Keep in mind, of course, also we are at zero bound in terms of interest rates. So at that point in time, there was other bigger fundamental drivers ultimately of macro policy, other than, of course, what the candidate meant for markets. Okay, now 2024. Let's take a look at this because this is important. As of today, what we can see, bond vol up and to the right. Okay, bond markets are hedging against who? They're hedging against Trump sweep. What are equities doing? Well, they're lower. Why? Because the equities don't care who gets into power. They're absolutely happy if Trump was to get into power because of his policies, deregulation, cutting corporate tax. Okay, they like Trump in terms of risk markets. Now, let's see what the markets are doing to this, because for the first time in the last two elections, we can see that the markets are actually hedging an outcome, which is we can see in the purple 2-year yields have rallied quite significantly from 3.5 to 4.13. So we've got 54 basis points in the 2-year over the course of, since the Fed cut 50. Now, this is crucial to understand. Part of that rally of 54 basis points is driven by inflation expectations, and some of it is driven by potentially Trump coming into power. And I think this is something important to stress. I will show you a fascinating chart towards the end, which I think is a little bit important to understand as to what comes after the elections. Okay. In terms of the S&P, what we can see is that we're pretty much flat, marginally flat, call it 2% up as we head into this election. Now, should we get the bond VIX or the bond vol starting to collapse, as well as the equity vol collapse post the election outcome, we should see these equities move up and to the right again. Okay. Now, again, how it moves depends on who's going to come into power. Trump sweep, seemingly the market's a lot more positive. There'll be perhaps a quicker, bigger rally. What does quicker, bigger mean? Well, we are very late cycle. Don't forget, we are now up shy on what, 36, 37% in the S&P since October last year. So we are very much late cycle of this trend. We're overbought on many metrics. So sure, of course it can keep going up, but it's not going to go flash crash to the upside and do another 10% over the course of, the next 2-3 weeks. Okay. Perhaps we do another 5, 6, 7% into the year end, but very much should we see that VIX start to sell off, we should see that Santa Claus rally start as soon as the election result. Okay. And in terms of course, yields, again, like I said, the market is pricing in some degree of a Trump victory, but yields are ultimately going to be driven by bond inflation expectations. Okay, right now, inflation expectations are rising quite aggressively. The market has sniffed this out, and should the Fed continue cutting, we should continue seeing these yields moving higher. However, again, a lot depends on who comes into power, and we'll discuss this as we get to the scenario part. Okay. And then in terms of course, gold, all I want to show you is gold. Yes, it's very much rallying. It's up 5% in the last 12 days, definitely pricing in a little bit of a inflationary outcome on this election. We can see the dollar also up significantly over the last couple of days. Why? Because it's pricing this idea of a more inflation environment, a more spending type environment from whoever comes into the house. Okay, the point is that there is hedging taking place in this market, and it's expecting, and this is key, the markets expect a Trump sweep. Okay, not because everyone is long gold and long dollar and short bonds, but because people are hedging against that event. They think that's the most likely outcome, and that's why they've put their money behind that outcome. Okay, and that's the key takeaway. The market's hedged that way. It's not hedged for a blue event. If we get the red event, yes, perhaps we see a little bit of continuation, and then the market needs to digest things. But ultimately, the real event is the one that's not hedged, which is the blue team winning. If the blue team wins, bang, bang, bond yields up. Much easier play on the night. Okay, that's the key takeaway from these charts. The market's hedged for red sweep, and it's not hedged for blue sweep. Now, some key markets you can pay attention to. I'm not going to go through this in great detail. You can take a snapshot of this. These are the markets that are most sensitive to Trump, okay, or to a red sweep, a Trump, winning the White House as well as the controlling Congress. And what we can see is, like I said, S&P. Okay, sorry, S&P is only up 22% this year. But since October, it's up quite a lot more. In terms of the dollar, it's up 2.75%. Bitcoin's up 72% this year. Okay, a number of markets are really, really strongly up this year as we move into this election result. Okay, the key takeaway here is that all of these are very, very sensitive to a Trump type move. Should we not see Trump win, this is where your best bang for buck is going to be. In other words, if we get the blue wave and the blue team wins nicely, right, Bitcoin will be down 10+%. Gold will be down 2-3%, maybe not 3%, perhaps 1.5-2%. Okay, equities may go down initially, but then ultimately bid up at some point. But that's the key. These are the proxy markets that'll be very sensitive, not just on the night, but after the election as well. Okay, now, this is the key chart I want to share with you, I want to talk about with you. This is the break-even inflation expectations, because I think there's a little bit of a misunderstanding about this recent move in bond yields. Yes, there is some degree of election hedging going on. We can see that in the vol. Okay, we can see that in the move index. Some part of that's got to do with elections. But A large part of that's got to do with the Fed. Okay. Go back to December last year. That's where Powell pivoted. All right. That was the low in inflation expectations. It rallied from, call it 245 and change up to 280. All right. Fed pivots, inflation expectations rally. Go back to when the Fed did a 50 basis points emergency cut. That was the low for inflation expectations. What did they do? They rallied since. In other words, inflation expectations and bond yields are being driven more by the Fed than some election outcome. And that's important to stress because I think there's too much emphasis on this move in bond yields being driven by the election. I think it's less about the election, more about the Fed policy. Now, what that means is Fed policy going to change anytime soon? No. They are going to cut again on Thursday, and I suspect they'll be challenged on if they're going to cut again in December. But should they not rule it out? Should they say, yep, we think a cut is very, very likely again in December? Ultimately, these inflation expectations, they're not going to go down. All right. They may sit here or they may continue to rise higher. The point is that Fed isn't going to change their policy anytime soon. And so we have to go into the selection result with that sort of a hat on, which is if there's going to be a situation where a Fed is accommodating and now Trump comes in and sweeps and he's got policies like tariffs, like deregulation, like giving money to corporates, ultimately that's not going to make inflation break-evens go down. It's going to make them go up. The result, bond yield will rise, gold will rise, dollar will rise. Okay, that's important contextually going into this. The reason why Paul Tudor Jones and Druckenmiller both came out and said at the same time that they are long gold and the only way is inflation is because of that exact backdrop, which is you've got a Fed stimulating. At the same time, you've got a candidate coming to the White House that's also going to stimulate. Now, Trump will stimulate a little bit more than Harris. The point is they're both stimulating at a time when the Fed is stimulating. That's why gold is only going up to 3,000. That's why Bitcoin is probably going to break 75,000 over the next couple of weeks. Okay. That's the point and the context you need to understand in which those comments were made from Paul Tudor Jones, as well as, of course, Druckenmiller. Okay. Now, let's go talk about the night because this is important to understand. There's two scenarios. Scenario number one, the red team sweeps. And scenario number two, the red team doesn't sweep. It's binary. And I think it's important you understand it this way. And I say it's binary because the market expects, let's call it the Trump sweep. Okay, Trump sweep, he wins the House and he wins the Senate and he controls Congress as well as he's now in the White House. Now, in that event, we know that he's got to focus on tax cuts. He wants to increase tariffs. He wants to reduce labor supply. Okay, ultimately that's inflationary. His foreign policy is somewhat deflationary. He wants to develop fossil fuel. Okay, that's problematic for oil. Of course, we know fundamentally and technically it's one of the weakest markets all year. And we know that he likes crypto deregulation. Okay, we know he's pro crypto and wanting to remove some of the SEC powers from it. Okay, now under this backdrop, the market needs, Bitcoin needs Trump to sweep. Because if Trump doesn't sweep, Bitcoin sitting at 69,000 has got a lot of longs in it. Why? Because everyone's taking a bet, they're hedging that he's coming in and that he's going to do crypto deregulation. Okay, the market's hedged for it. So if Bitcoin doesn't get the Trump sweep, the reality is a lot of those hedges are going to come unstuck and will drop down to 62,000 again. That's the reality of the situation. If he sweeps, what happens? Well, I think there's enough, Momo FOMO to get Bitcoin back to 75,000. We get about 75,000. Why short it? There's only one way up then, and that's we're in an illiquid condition in a volatile market, and it should then make its way up towards somewhere. Where that somewhere is depends on who's willing to sell it and where they're going to sell it. Okay, but Bitcoin is a prime trade on a Trump sweep along. Okay, in terms of 2-year yields, what does the market do on a Trump sweep? Well, okay, I think we do move higher in the near term. Right, I think we move up to around 440. That's around another 25, call it 30 basis points higher from where we are, and I think that's not just the election result, it's the election result plus the fact that the Fed's going to cut this Thursday and they're going to keep open the door to another cut in December. Okay, so on that note, I think 2-year yields have got a little bit further to go before perhaps they top out and start to retreat. Okay, S&P, like I said, we're very much late cycle, so I expect a late cycle grind. What do I mean by that? It steadily creeps higher. A lot of two-way trade, horrible to trade as a trend trader. Okay, but target 6,000 and we should get there at some point before the end of the year. Okay. In terms of dollar index, I think it's very positive for the dollar. Contextually, every central bank is cutting. The Fed is cutting despite the fact that inflation expectations are rising. I suspect if they keep rising, the Fed will be forced to pause a lot sooner. That puts a massive dollar bid. And I think over the course of the next couple of months, dollar is a one-way trade only. It's only a buy on a Trump sweep. Okay. Bitcoin, I've already spoken about. And then gold is an interesting one. Look, I think gold is one you have to be very, very cautious of on election night. Why? Because there's a tug of war going on in gold. At the moment, should Trump sweep and yields move higher and dollar bid up, that's technically a sell for gold. That's an environment in which gold typically struggles. However, the flip side of that coin is that gold rallies on this idea of a more inflationary type fiscal spending from Trump. Okay. So there is logic behind buying gold. But like I said, I think gold initially rallies on a Trump sweep, perhaps locks in people, gets up to that 2850, maybe 2900, at which point I think we top out, we do a nice volatility stop. If we do start to rotate lower, be very, very, very cautious. Why? Because gold is up a significant amount. It's overbought on every metric. I was just saying to a trader today, gold rallied. If you go back to COVID 2020, where the Fed cut and they went from 4.5 billion of balance sheet all the way up to 4.5 trillion of balance sheet to 9 trillion. They cut rates to zero. Gold did a 50% move in that context. Okay. We're up currently around 40 odd percent in terms of gold since this rally started. Okay. So factor that in. It's up a significant amount. Of course, overbought conditions can stay for a long time, but just keep in mind where you're buying it contextually. Okay. That's the key. I think gold's one you got to be a little bit cautious, a little bit nimble on night. Now, I told you the second scenario is no sweep. And I think no sweep, you trade the same way as you trade a blue wave. The only difference is the speed of the unwind. Okay. So how you have to think about this is option two is, let's call it no sweep or a Democrat win. Okay. And I'm going to do on this page so we can talk a little bit about Miss Harris. So we've got no sweep and we've got a Democrat. I think the market outcome is exactly the same. The only difference is the speed of the unwind. Now, should the Democrats win, okay, remember the markets are hedged against a Trump victory. And so what that means is that if the Democrats do win, the first thing that comes out of the market are the hedges. So let's talk about those hedges because they will unwind pretty quickly. Okay. The first one is, of course, inside Bitcoin. I've spoken about that. We do have quite a few hedges, quite a few longs that have bought for a Trump victory. I think that unwinds pretty quickly back to 63,000. It's around 13% lower from current prices. Okay. So quite a quick snap down in Bitcoin if the Democrats win. After that, yeah, perhaps it bounces. Is Harris bad for Bitcoin? No, of course not. Okay. She's more of the same. She's basically like a Biden, right? So she's not taking Bitcoin back to 30,000. She's not going to become more regulatory on Bitcoin. So yeah, at that point, 62,000, 63,000, by all means, if you like the market, if you like owning it, that's a good spot to buy it. Okay. In terms of the dollar index, right, I think on a Kamala victory, we do see a little bit of an unwind in gold initially. But then again, like I said, dollar as well as gold are not being driven by the candidate in the White House. They're being driven by the Fed. Okay, so I think we see a little bit of an unwind in the dollar because it's been bought into this. I think we see a little bit of an unwind in gold because it's been bought into this. I think we see a little bit of an unwind in US 2-year yields because it's been bought into this. All right. And that's why if you ask me what's the easier play on the night, I think on the night, the easier play is the Democrats. Okay. The blue team, if they win, it's going to be a much easier trade for us as day traders. But for next year, if we talk about the whole year and we talk about the next 4 years, I think Trump is a lot more fun. Okay, he's a lot more volatile. He'll create a lot more random opportunities for us as traders. And so again, you kind of have to pick your poison. You want to make money on the night, make sure you know where the easy opportunities are. So yeah, like I said, on the night, the easy trade is going to perhaps be some sort of a blue victory. Okay, but like I said, no sweep is identical to a Democratic win. Why? Because keep in mind, like I said, the market is hedged. Okay, the market's expecting a Trump sweep. So again, if Trump wins, but he doesn't sweep, you're going to see a little bit of profit taking in some of those hedges first. Okay, and that's important to understand because the order of events is what matters. You could see gold drop $100 the night of or the next couple of days, and then rallies all the way back to record highs because inflation break even is important. Okay, same with yields. We could see 2-year drop all the way back down to 4%, and then begin the process of rallying back up to that 430 resistance I was talking about. Okay, that's the two key takeaways from the night. It is very much a case of it's binary as to what the opportunity scope looks like. Okay. Some final words and some final thoughts, and I'll open up the floor to Q&A. You're not going to make your career trading election night, and you can lose your career. Okay, like I said, when Trump came into power in 2016, it was extremely volatile. I remember doing quite well in gold and buying gold on the risk-off event. But what I want to suggest to you, make sure you outline your scenarios where you'll be aggressive. So let me tell you where I will be aggressive, and keep in mind this is only the fourth election I've traded. So should we have contested results? Should the Democrats tell us they're going to contest a state, as well as Trump says they're going to contest us, they're going to put it to the Supreme Court? If I hear that at any point in the night, or I start to pick up on these contests taking place in multiple states from both parties, at that point, I'm not going to think. I'm just going to put the risk-off play on. Long gold to record highs. Long the back end of the bond curve, definitely. Okay, short the S&P. I'm not going to overthink it. The markets will be thin. There won't be anyone really on the bid and the offer because no one wants to really. There's no algorithm switched on. Okay, so the risk-off trade, should we get a contested, very close election, that's a play I can be quite confident, quite aggressive with. Should Trump sweep? Where am I confident? Well, I'm very confident that Bitcoin breaks up above 75,000. And I'm even more confident that above 75,000, he's not going to stop anytime soon. He's not going to stop at 76. He's not going to stop at 77. He's probably not going to stop because who's going to sell Bitcoin? Half the street doesn't even like the damn thing. So they're not going to sell it, right? So that's the point. I think Bitcoin is a trade you can be quite confident on a sweep. I think also on a sweep, where you can be a little bit more confident is I think the dollar should bid up. Okay, I think we saw that in the euro dollar today, euro dollar FX, we saw it gapped up. Okay, there was a change in the polls of the weekend and euro dollar futures gapped up. That's highly unusual. But that tells us that that's a good candidate to trade off of. Trump sweeps. I think that euro dollar is one that is got some very interesting levels. And I think that should offer itself down the page to fill in that gap, but also move lower because we know the ECB right now is on a very aggressive cutting cycle versus the Fed. Now, in terms of the other side of the coin, the blue side, okay, like I said to you, I'm quite confident that if the blue trade is on, I quite like being long front-end bonds of the US curve. I like buying 2-year, okay, because they've priced in, they've done a lot of work over the last couple of days. I really like the idea of a short gold trade. I think that's a trade that could happen quite quickly, flush up a couple of those long positions. Everyone's long that market already, okay? Those are the kind of trades where I'm going to be confident on. I'm going to be willing to hit them a little bit harder. Everything else on the night, when I hear a poll coming up, that's all what we call shits and giggles. That's kind of just playing around, having a little bit of fun with a couple of lots here and there, just enjoying the experience of it. Okay, at the end of the day, my job's a trader. I'm there to trade some flows, see what happens. But when those big key plays come along, I've got to be prepped. I've got to make sure that I know what I'm going to do on those specific scenarios, not guessing, not this person says this is this for this market. No, I just told you, if Trump sweeps, I'm buying Bitcoin up to 80, 85, 90,000. I'll wait for someone to start, providing liquidity and then I'll get out. But I'm confident. I don't need someone to tell me levels in the Bitcoin. I can simply just watch it on the screen, trade what I expect, and run that trade according to what I think it should do. Okay. Let's open the floor now to some questions. And then we can go from there. So first question, how do you think crypto market will be impacted by Harris? Yeah, I think I've answered that. Down to 62,000. She's not bad for Bitcoin. She's not bad for crypto in general. Okay, she's very much a replica of Joe Biden. She believes in protection, and that means she believes that the SEC's current stance is sufficient. So no, she's not bad, but I think there's a bit of hedging. There's a bit of options in the Bitcoin. We know that. Go look at some of the implied vol in the Bitcoin, and you'll see everyone's got some options on for Tuesday, Wednesday, Thursday, and then it just drops down again. So everyone's kind of trying to take a punt on breaking above that 75,000 level. Okay, and what that tells me as well is if everyone's bidding strikes around 75, 76, 78, 80,000, whatever, wherever they might be, the reality is as soon as we get above those levels, the dealers are going to have to hedge out those positions. So I think that's what takes us through that 75 level quite aggressively. Okay, it'll be a bit of dealer flows coming into the equation. So yeah, Bitcoin I think is a good one to trade on a Trump win of both the House and Congress, the sweep. Whereas I think if Kamala wins, I think it's just a little bit of a dump down to 62, 63,000. There's also a gap there. That's why I like that 62, 63,000. Okay. Do spoos bid on a Trump sweep, even though it could mean a more hawkish Fed? Again, like I said to you, don't assume it's a hawkish Fed. I know what you're saying. You're being smart and you're not wrong. there is a hawkish Fed, but there's not a hawkish Fed this week, and there's perhaps not a hawkish Fed this year. So there's no need to preempt the reaction function. You are right. Your reaction function is correct. More inflation, more break evens, higher inflation does mean that a Fed pivots. Let me rephrase. The next reaction function from the Fed is not a pivot, it's a pause, or they at least signal that they will consider a pause at their next meeting. Okay. Now, until that happens, there's no point in overthinking it. Okay. Markets like Trump, they like his policies. But like I said, you've got to be careful in equities because they are like late cycle. Okay, we're very, very late cycle. Doesn't mean we can't keep going up. Of course we can. But the key there is going to be watch the VIX. Okay, if that VIX starts to squash down, it's year end, guys. The year end rally, like I showed you, 2016, 2020, markets just love to rally into year end after elections. It's something exciting, particularly it's new policy coming into play. Both Democrats and the Republicans want to spend. We're in an environment where the GDP is growing at 2.8% year over year. What's not to like about the US stock market? There's absolutely nothing not to like. There are risks. Yes, definitely there are risks. We're overbought. We're trading at some phenomenal PEs. I get all that logic, but the party's on. You might as well party. Don't try and be clever. Not at this point. Okay, let the data turn and then you can turn with it. As a systematic trader with both mean reverting and breakout strategies, what do you anticipate will outperform this week when considering the liquidity and volume around the elections? I'd probably say it depends. My instinct, given the implied hedging going into this election, is that there may be more mean reverting than breakout. But it depends. I think it depends on the market. Okay, I think, if Trump comes into power, can Bitcoin break out and continuous breakout? Absolutely yes. Okay, I think there'll be a couple of wins going for the Bitcoin if Trump wins. One is obviously his relaxed sort of regulatory look on crypto, but combine that with a risk-on environment in the equities. Okay, that's kind of rocket fuel for crypto. And then don't forget the retail guy will come online as well once we break above record high. So there's that to consider for Bitcoin as well. So yeah, I think it depends on the market. In terms of what will be likely to be more mean reverting, I think bond yields have done a lot. I think I mentioned to you, if you go back to 2016, when Trump came into power, the 2-year priced in 45 basis points after he came into power. In other words, the 2-year moved 45 basis points because Trump was going to be inflationary. We've moved already 54 basis points into this election. Yeah, like for like, we've almost priced in a Trump victory. But like I said, just not just the elections, also inflation break-evens. Okay, so do I think 2 years a little bit oversold? Yeah, absolutely yes. Can yields move another 10, 15, 20 basis points high? Of course they can. All right, but from that point, I think into the end of the year, I think you'll find that 2-year yields move sideways. Okay, until we get a little bit more understanding as to is there actually going to be inflation or not. Okay, don't forget as well, when I talk about inflation break evens, that's an expectation. Right now, if we look at the hard data, okay, we've seen a continued disinflation trend in the actual hard data. That is lagging, and forward expectations are forward looking, but it's not to say that they are right. Okay, the market just thinks Trump's coming to power, he's more fiscal spending, therefore there should be inflation. But we may never get that inflation. Okay, so important to stress that. Okay, first election for me. Thoughts on trading the order flow? Yeah, have some fun. I think that's the key takeaway. Don't be clever. I think my biggest mistake I made early elections is you kind of try and be clever. You read the newspaper. The newspaper says Trump will make bonds go lower, and then you sell it, and he becomes president. You sell it more, and it keeps going up, and you don't understand why. With elections, obviously set your scenarios as we've done, and trade those scenarios. Okay, be very nimble. That's the key lesson. You've just got to be very flexible, very nimble. Of course, the markets think Trump sweep is what they're hedging against. But it doesn't mean Kamala Harris can't win. Of course she can. So make sure that you do prep. If she does win, what are you going to do? Because that's where the real opportunities, or at least the easier opportunities, are. So that would be the key takeaway. And then just manage your risk. Okay, it's not the kind of night where you want to up your clip. Definitely play around in the flow, in the momentum with smaller clips. And then I think, yes, once something becomes a little bit more certain. Okay, so one play I really like is, if Trump starts to do well on the night, as we get to around 72,000 in Bitcoin, as we start to bid up to 73,000, in my head I'm thinking this is going above 75, so I'm going to buy 73 and I'm going to buy it in size because I think it's going above 75,000. Right? That's the kind of play where you can start to put something on because you've got that structure that you're leaning on. You also know that there's that option pricing at those strikes. That's gonna, you're gonna see some dealer flows coming in above 75,000. So I think that's the way to play it: is keep it tidy, keep it nimble, have fun, don't give away too much risk early on. And when things start to become a little bit more well known, by all means, take a shot, have some fun. Okay. What price do you see for the cycle? What price do you see for the cycle? What price? I don't understand the question. If you can ask that question again with regards to what price for which market. You mentioned that there is likely to be limited liquidity this week. Which proxies aside from spreads are you using to determine this? Again, I think liquidity is one of those things that I would see typically on a price ladder. Also, I would assume a lack of liquidity just given what the volatility indices are doing. Okay, so pick a market, whether it's the move index, whether it's the VIX, not the VIX, that's not a great example. If you look at the implied vol in Bitcoin, all of that is suggesting that there is a much wider degree over which prices will trade. Okay, now if you run a book or you're a bookmaker, or you provide liquidity to the market, you are well aware of these liquidity conditions, and you're not going to be wanting to provide that much market making in extremely volatile conditions. So you can assume there will be a little bit less liquidity until we get some sort of an outcome. But then, like I said, once those volatility indexes start to turn, once the VIX starts to offer, once the move starts to offer, fine, that liquidity should return, those market makers should return. And like I said, if we do see VIX and move moving down, make sure you're buying those bonds, make sure you're buying those equities, because that's ultimately when you're going to get some decent flows and opportunity. Okay. And yeah, I think maybe just you mentioned proxies. I think that's a good one. Let's talk about some key markers just to keep an eye on. I think that's a good one. I think definitely yields, that will be a good clue. Yields have really kind of been the key driver of a lot of markets. And what I mean by that is over the last 2 weeks, you would have noticed bonds every day in the US have sold off. And even when they've bid, they've sold off. Okay. So they would bid and sell off. In other words, they've really been on an offer in terms of prices. Okay, yields have been rising very, very aggressively. So I think bonds are going to be a very good indication. Why? Because I think if the bonds continue to move lower, I think it's signaling to us that the market thinks the outcome is a bit more inflationary. And I think the result of an inflationary outcome, okay, is that gold will bid up, dollar will bid, right, equities will bid. So I think 2 years is going to be a very good proxy to lean on. The converse is true as well. I think if we start to see 2 year bid up, I think in that scenario, okay, I think perhaps the market suggests that maybe it's not as inflationary. So gold should offer up, perhaps the dollar offers up as well. And so I think 2 years is a very, very good proxy to pay attention to. I think that'll give you some really good clues, because that's the only thing really that's seen some decent hedging going into this, that also provides an understanding of other markets. Okay, we can't exactly use Bitcoin as a proxy because Bitcoin doesn't really drive anything else other than itself and some of the other cryptocurrencies. Okay. How do you see the market if they cut 50 to 75? Yeah, don't think they're going to cut. Well, let's actually talk about that's a fair question. If we do have a bit of a hung situation, let's actually talk about this, because this is something that it's a very unlikely outcome, but definitely possible. If we do get contested votes, in other words, let's say it's an absolute sort of fine margins type race and it comes down to one state, I think you can actually be ahead of that, be ready for that, be ready for the contested side of things. And that's where, if you see it, you're probably going to get a half an hour on the average guy, or let's sort of call it the average trader on the street, that hasn't thought of this. But the key here is if it's very close and it's very contested, it's kind of one Reuters comment, one Bloomberg comment away from the market turning risk off very quickly. Okay, because all it takes is Trump to say they're challenging this in the Supreme Court, and the market will price in a little bit of risk off. And then, Democrats send out their speaker and he says, no, we're also contesting Georgia, whatever it might be. And I think it's at that point that the market just takes fright. Okay. And I think that sort of a scenario, coming back to what you said, that sort of a scenario could actually prompt the Fed to cut 50. Okay, if we do get a scenario where, on election night, on Wednesday, maybe equities are down 5-6%, you'll all of a sudden start to hear people talking about or you'll start to see the markets, in fact, pricing in more than a likelihood of 25 basis point cut on Thursday. Okay, so that's something to keep a close eye on. Is don't sell the bonds just because they've perhaps gone a bit too far. Because if they're going bid on a risk off, it's perhaps they're going bid because they think there's more likelihood that the Fed could do an emergency cut on Thursday. Okay, very, very unlikely scenario. You would need to see a very close race where both parties are kind of calling the other one a cheat. You see a little bit of disobedience on the street. Okay, the media will be very good at this. They'll point out how, Republican people are throwing bins at the Democrat people and blah, 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 blah. You see that kind of scenario? Yes. Don't be surprised to see the market push a little bit more of a likelihood of a 50 basis point cut come Thursday. Okay. And again, if they're going to cut 50, you know what that means for gold. Up, 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 and up. Okay. How do you anticipate the results of the election will impact the Middle East conflict, if at all? Honestly, I think if Trump comes into power, the war between the Ukraine and Russia will be over relatively soon. I don't think that'll last much longer. I think if Kamala comes into power, it will continue as is, which is it'll find its own natural conclusion. In terms of the Middle East, again, I think right now you're talking about the Middle East conflict. From a market standpoint, the market doesn't think there's a conflict. And I say that with the utmost respect for what's going on in the Middle East. But it's a case of the market doesn't have any geopolitical pricing in right now. It doesn't see the ongoing sort of, let's call it incursions as threatening for the markets. Okay, so regardless of who comes into power, I don't think it really matters for the implications in the Middle East. I think Israel will continue along its current path regardless. Okay. What I think the implications for the market that do matter is oil. Okay. I think if Trump does get a sweep, I think oil is it's one of those ones to keep a very close eye on because no one's talking about it. And that's why I think it's a fantastic play. I think oil's been pretty weak all year. Right now, if we look at prices, they're currently sat right at that, wonderful little resistance that, we've been sitting pretty much all year, that's $72 a barrel. And I think, if Trump does do a sweep, I wouldn't be surprised if we're trading 66 and below pretty quickly into year end. So keep a very close eye on oil. Trump does mean more supply. He's always been about US oil dependency and removing it from OPEC. Obviously, the US is now a massive exporter of oil as well. So they're not dependent as much on the Middle East, but he's very much about pump, 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 pump. Okay. Let's finish off a few more questions. What price do you see for Bitcoin this cycle? Okay. How high does Bitcoin go? Flip a coin. I don't know. I don't know. I think what we do know about Bitcoin and what we can learn from the last two, let's call it hype cycles because that's what they are. It typically it comes in two phases. The first phase is, I don't want to call it smart money because it's not necessarily smart money. Let's call it informed money. And this is the kind of people that have a chart up. They have a news flow. They, buy the breakout. They've got algorithms, whatever, and that's everyone buying at 72, 74, 75, 76, 78,000, the momentum players. Okay. That's the informed money. What comes after that part is the less informed money. I think of the taxi driver, the Uber driver telling you, Bitcoin's going to the moon and he's hodling. Okay, that's the second phase. And that phase can obviously drive Bitcoin quite a lot higher. Okay, think back to when we broke above 19,000, we catapulted all the way up the page before we even stopped. So how high do we go? Can we go 20%? Yeah, I think that's a high probability. Okay. Can we go 50%? I think that's a medium probability. Can we double in price? I think that's a low probability. How high we go? I don't know. It really just depends on, who's going to take profit and where they're going to take profit. Okay. Maybe Michael Saylor's sitting there at, 90,000, wants to lock in a bit of profit. I don't know. Okay. So yeah, the key thing to take away there is watch for those liquidity buckets. Bitcoin is very good at that. Okay, if you have a footprint chart, get an hourly footprint chart up of Bitcoin, and when you see that liquidity bucket coming in, the first one you definitely don't want to get out of. Okay, if you're a day trader, fine, that's where you lock in profit. But that first liquidity bucket is where someone's taking profit. All right, it should scale above that as that retail flow comes in. But yes, watch those liquidity buckets because that will tell you where someone is effectively scaling out of those longs. Okay, all right, guys. Good luck for the election for the Tradelo traders, of course, within the private Discord community. I will be live tomorrow. I will be sending some ideas, some updates. We'll be talking about it all night. And of course, talking about the opportunities into Wednesday. Final words. Just keep in mind that the election is one part of it. There's a couple of hours. But the real trades kind of start Wednesday, Thursday, Friday. Okay, so don't forget about that. There's going to be a lot of opportunities. Manage yourself. Okay, you don't want to be working 16 hours, otherwise you're going to make lots of mistakes. And most importantly, manage that risk always. And for this one, have a little bit of fun. Okay, for many of you, it will be your first election. Enjoy it, record your screens, play around, and come out positive on the other side. Thank you very much. Good luck.